On Wall Street today, investors were focused on Washington and what Ben Bernanke was telling Congress about the economy. They were reassured by the Fed chairman's comment that there's no set timetable for pulling back on the central bank's bond-buying stimulus plans. Also boosting investor confidence, strong quarterly earnings from Bank of America. And we'll take a closer look at both of those stories in just a moment. Now, despite all of that and an upbeat outlook of economic conditions around the nation, in the Federal Reserve's latest Beige Book survey, stocks still posted small gains. The Dow added 18 points, the Nasdaq added 11.5, the S&P up 4.5 points.
More now on today's testimony from Fed Chairman Bernanke before the House Financial Services Committee. The Fed head was on message with lawmakers about when the central bank might begin pulling back on its asset buying plans. Hampton Pearson has more on the chairman's testimony.
Federal Reserve Chairman Ben Bernanke told lawmakers markets are more stable now that investors understand the central bank is in no rush to taper its bond buying program or raise key short-term interest rates.
We're very focused on Main Street. We're trying to create jobs. We're trying to make housing affordable. Our low interest rates have created a lot of ability to buy automobiles.
Persistent microphone problems in the hearing room did not stop the Fed chairman from fine-tuning that message. Monetary policymakers agree that 7% unemployment is a good threshold to begin thinking about tapering the bond purchases, now at $85 billion per month. Key short-term interest rates will remain at historic lows, at least as long as the unemployment rate remains well above 6.5%.
The phrase, "at least as long as," is a key component of the rate policy guidance. These words indicate that the specific numbers for unemployment and inflation in the guidance are thresholds, not triggers. Increases in the target for the federal funds rate, once they begin, are likely to be gradual.
The Fed is closely watching the impact of rising mortgage rates on the housing recovery. Housing starts fell 10% last month.
We will be watching to see if the movement in mortgage rates has any material effect on housing. I mean, the main thing is to see housing continue to grow, more jobs in construction and the like.
On what may be Ben Bernanke's last monetary reports to Congress as Fed chairman, there was bipartisan praise for his service.
You have served us very well under very, very difficult circumstances, and I appreciate your service to your country. Thank you.
His second term expires in January. Bernanke was mum with lawmakers today about his future plans. But the here and now debate over the effectiveness of the extraordinary economic measures resumes tomorrow when the Fed chairman testifies before the Senate Banking Committee. For Nightly Business Report, I'm Hampton Pearson on Capitol Hill.